Hello and welcome to Moving Iron Podcast Markets with Shawn Hackett. This edition of Moving Iron Podcast is brought to you by Axon Tire, helping dealers move more iron for the past 100 years. For more information, go to axontire.com. Axon Tire would like to give all the loyal listeners of the Moving Iron Podcast a free Axon travel notepad. I know you need one of those, Shawn, as much as you're out and about. You need one of those notepads for sure. For sure. So if you want one of those for all your traveling excursions that you've got going on, just go to marketing@axontire.com and they will send you a free Axon travel notepad. Just make sure you tell them the Moving Iron Podcast, send it when you go to marketing@axontire.com. Valley Transportation has been hauling ag and construction equipment across the country for the past 33 years. Call Parker at 800-657-4910 for all your trucking needs at Valley Transportation. Our goal is to help you reach yours. No matter how you buy your ag equipment, whether it's from a dealer, an auction, or a private party, AgDirect can help you finance it. You can even apply online at agdirect.com. Learn more about your financing options at agdirect.com. TractorZoom has over $20 billion in heavy equipment sales data. TractorZoom's Iron Comps is the industry's trusted solution for transparent equipment values and auctionable pricing insights. This podcast is also brought to you by Anvil AppWorks. Their Dealer Connect CRMI app with integrated inventory management is an affordable Salesforce-based solution for your dealership. Create connected customer experience and transform how you work. Shawn Hackett is with Hackett Financial out of Boca Raton, Florida, and he is nice enough to come on and talk about what's happening in the marketplace. So, Shawn, how you doing this morning?
I'm doing superb, really, really good. So
I'm almost making it through all those without messing up. It's only been 5 years that I've been doing that, so I'm getting better, Shawn. Things are really coming together for me.
Yeah, you're a fast learner. So
that's what they say. That's what they say. But that's a relative term too, so you got to take it with a grain of salt.
Yep.
So, Shawn, there's a lot of stuff happened this week. The Fed came out and they ended up raising rates again, like no shock there. You can tell that the market had a lot of that baked in because we saw a big sell-off, which you would expect, reactionary thing, but it came right back. Following day, you saw some intraday volatility and how things finished up. But for the most part, it really feels like the markets kind of have this expectation because Chairman Powell's made it very clear, like we're raising rates, so just get ready, folks. We're gonna do this. Made it very clear. So it feels like the markets have some reactionary stuff, but most of the stuff's kind of baked into it. Fair statement there, Shawn?
I think that's a very fair statement. And I just think the market, knows that this kind of rate increase, this kind of reduction in liquidity, sooner or later, we're starting to see more and more areas of the economy starting to break down. And at some point, they're going to hit the pause button. And the market never gets that right. They always say they're going to raise rates forever until they don't. But I think the market's getting prepared. The dollar tried to surge and now it's backing off. I just think the market's priced it in and it's just waiting for the pause to come. And so in the meantime, you'll get these short-term reactions. But for the most part, I think the Fed's almost done. It doesn't mean they're going to lower rates and print all kinds of money right away, but I think they're getting close. I think the economy's just going to start to get too shaky, and they're not likely going to push too hard if that really starts to show up. And of course, if the inflationary numbers continue to work their way lower, which they certainly will. So,
right, okay. Let's talk a little bit about South America just for a little bit because of where they're at and what they've got going on. Argentine corn and wheat crop forecasts have been cut by, I think corn's been cut by about 2 million metric tons, and looks like, soybeans by about, they're going to raise that about 1 million metric tons. And then, wheat is in the same kind of area. I guess looking at what you see happening there, and then here we are in, drilling wheat season here in the U.S. It's still really dry in a lot of places where they're drilling wheat, and then what you see happening down in Argentina, which is a large wheat producing country. How do you think, I guess, looking at the overall spectrum here, with even though we're moving into an El Nino year where we're going to see some more moisture, we still have to have moisture to drill into. So I guess what's your expectations right now as you look at winter wheat moving forward here?
Well, the problem with winter wheat, we don't have El Nino yet.
Right.
We're going to get El Nino as we go into 2023, but that's too late. for putting moisture in the ground to get the planting underway. And so that's just going to, we're still in the tail end of La Nina. So that's not going to come and save the day for acres, getting the crops going into dormancy in good shape, but it could create a very, very strong finish to whatever does get planted and whatever does go into dormancy in some shape that's worthwhile. And I think that's the story: is terrible start, really good finish. Still means a much better crop than we've had the last few years. And I think that's, going to be what's going to start to pressure the market. Not now, but I mean, like later on as we get into the spring and they see that, oh my gosh, we've got some really good moisture. It's not, it's warming up and that sort of thing. So I think that's, and the markets, look, right now we're trading Russia as that we seem to be trading every soundbite that's going on with Russia. The deal's off, the deal's on, the deal's on, the deal's off. Every meeting between every player is being analyzed, but we've put $1.50 on the wheat market here.
Right.
I don't think we're going to put a whole lot more on. It's too dry for the planters in the U.S. And it's too dry. I think this price level 9.5. I think that's kind of priced those factors in, and I don't see it being a factor. The bigger factor for South America is that Brazil's getting some fantastic rains exactly when they need it to get the planting going, and Brazil's far more important when it comes to corn and soybeans to the world than Argentina. I'm not saying Argentina is not important, but Brazil's far more important. So it's kind of like good cop, bad cop. Argentina is still struggling with drought, and they will continue to struggle with drought as La Nina hangs on. But the La Nina pattern isn't necessarily a problem for Brazil, and it isn't. They're getting some very good rainfall. So I think overall, the Brazil rains will overweigh the drought concerns in Argentina, especially at these higher prices that we've seen. So I don't think that's a driver right now. I think the market's getting ready for a top, as we've been saying. We're feeling the grain markets can be, making an imminent top here. And so we think producers ought to be thinking about making cash sales and protecting downside price risks. We would need Brazil to get into trouble. And if they, that's just not going to be on the docket here for at least the next couple of months, according to our work. So,
yep. So kind of circle back here a little bit on what we've talked about here about, I think it was last week you did that, kind of talked about what rice and wheat and what that looked like. And here's an article out there right now that, India is considering rice export requests. And, I guess India is basically talking about, looking over a request for exports to allow shipments for some grain cargoes that have been stuck in ports for a while. So they've been kind of back and forth on the rice thing and really starting to pay attention to that. Is this any kind of a signal to you, Shawn, that outside the broken rice export side of it, that there may be some other rice export restrictions coming out of India?
Well, I mean, they banned broken rice, and they're putting 25% export tariffs, kind of like what Russia did the last couple of years, to try to hold back exports. And India's going to go through with that. I mean, and the Asian rice prices have taken off. I think the next real key thing to watch is to see how China handles everything. They've been a very big buyer of rice the last 12 months. And if we see them pick up the pace even more based upon their current rice crop being probably one of the worst we've seen in modern day times, that's probably going to be the next trigger to set off the rice market higher. And we would expect probably see something like that in the, sometime as we get into the fall and it becomes clear to the Chinese and everybody else that their crops just, right now, I talked about how Asia likes to always say, "Oh, there's always plenty of rice. There's always plenty of rice. There's always plenty of rice," because, quite frankly, you can't tell Asians who rely on rice that we don't have any for you. So you keep saying that until you can't deliver.
Right.
And I think they're going to get to the point of not being able to deliver on those promises as we get to the latter part of the fall, and then that's where the rubber meets the road, and we have something an adjustment that has to take place beyond the adjustment that's taking place from the India restrictions of exports and banning of exports. So it's definitely a market to be watching, Casey. What's amazing is during this entire correction in grain markets, we saw all the way into those early August lows. Rice never really corrected much. It stayed near the highs for the year. In fact, it's near the highs for the year right now. So definitely think that could be a bigger story as we approach the end of the year. So
Okay. All right. Got a cold storage report that's supposed to come out this afternoon, and they're going to talk about what that looks like and where they're at. But you're also seeing choice beef under some pressure here. It's dropped another $2.51 on Wednesday, and it's under 250 right now. So I guess as you're looking at that, how important is that report going to be to what we see happening with just box beef in general, I guess?
well, we know that cold storage beef supplies are very high
Right.
compared to normal and compared to where they've been the last couple of years. So we've rebuilt the reserves that we would like to have, especially going into the holiday part of the season. We slaughtered a lot of animals. It's a tremendous herd liquidation year again. We don't have a supply problem. We're not going to have a supply problem in beef. In this fourth quarter, it's really what happens after we get through that overhang. So it's almost like what happened in China when they herd liquidated the hog herd and they flooded the market with pork post second round of African swine fever. There was this massive oversupply, and then they ate through it, and now we're on the other side where pork prices are skyrocketing, making new highs. Hog prices are skyrocketing, making new highs. That's what we envision seeing once we get out of the fourth quarter. So
Yeah.
I don't think we're going to get any surprise. I think they're going to continue to say we have plenty of beef, and there is plenty of beef. And I think that we've been bearish. We've been worried about this cattle price right now because I just think we have too much supply, especially with a weakening economy. I just don't see that this is the lightning rod point for that supply shortage, what we've been talking about, to really kick in. I think we need to get through that overhang. But once we get to the first quarter, there's really going to be pretty hard to put this genie back in the bottle. And I think once that gets going, it's going to be pretty wild to the upside. I view where we are now like 2013, 14, we're like late 2013, going in 2014. That's where I feel we are, just before we had that, wild herd rebuilding rally in 2014 that took prices to all-time highs. Whether we see all-time highs again, obviously there's a lot of moving pieces, but certainly the fundamentals are there for cattle ranchers to have a pretty good go of it in 2023. So
Right. Okay. All right. Last thing, Shawn, is you're looking at weekly export reports, and with the strength of the dollar the way it is, and the various your last report you put out, you talked a lot about some real issues you could see come with a big spike in the price of the dollar comparatively to inflationary issues around the world. Watching this weekly export report as it comes out, how do you think traders are going to use that tool, I guess, when they're looking at the trade right now?
remember, the weekly report is in and of itself is never like a 1 week's report is like just massively important. It's the cumulative effect.
Right.
Are we running behind? Or what traders do is they say, what is the USDA expectation? There's a baseline. The USDA says, all right, we think export's going to be X.
Right.
Are we running ahead of that pace or below that pace? And the longer we either run ahead or below, the market then starts to think, okay, we have to lower or raise ending stocks based upon that. So what I think we're going to start to see is we're going to see that the exports are going to continue to run below current USDA expectations because of the strong dollar, because the buying power of global consumers have been completely destroyed by the strong dollar and the crashing currencies. You look at the yen, you look at the euro, you look at the Chinese renminbi. I don't care which currency, the Brazilian real. I mean, just crashing. You're destroying the wealth and buying power of global consumers. And of course, the US buying power is soaring because our currency is stronger. Yet we still have high inflation here, Casey. So if we're complaining that prices are too high here, think if you were in a country whose currency lost half its value in the last couple of years, how unbearable it would be. It's just not good. It's not good. And that's why, it's so important to get this US dollar to top out here in the fourth quarter, roll over, and be in a downtrending market in 2023, because we need a weaker dollar to rehabilitate demand overseas, to get buying power back in the hands of those that buy U.S. ag products. We think that's going to happen. We don't think it's going to happen in the fourth quarter. We think the fourth quarter is like a topping pattern. You make a high, you correct. You make a high, you correct. You kind of develop this topping pattern. We think we're in a topping pattern, which is better than going up, continuing to go up, but it's not going to rehabilitate demand until it starts to roll over. Once that happens, and the market's convinced the top is in, then everything changes, Casey. And then those exports start to take off. And then the U.S., has a good demand side tailwind. Now, remember, we need that demand next year, because if we have a El Nino and we have big crops, we're going to need bigger demand to absorb that and get through that. Yeah. So it's going to be kind of a yin and a yang situation. But for right now, the strong dollar is very detrimental to foreign demand and very detrimental to to having a consistent move higher in price. That's why the way I'm looking at the grain markets, I think we've done all we can do to get to pump prices higher against a strong dollar. I just don't see much ability to do much more than this unless we really, really get Brazilian production in trouble. And I don't see anything that would happen in the next 2 or 3 months that's going to offer that carrot. So what it means to me is harvest is going to really accelerate here in October, and demand's going to be on the weaker side. And I think that the price levels we currently have are going to be viewed very attractively by U.S. farmers, and they're going to sell it. And that means lower prices as we get into the end of the year. And that's kind of what our forecast has been and continues to be. So.
Right on. Well, good stuff as usual, Shawn. Folks want to reach out to you and get more information about what it is you're doing over there at Hackett Financial. What's the best way to do that?
Our website is Hackett, Hackett, advisors.com. Lots of information on there to tell people what we do, why we do it, and how we do it, to see if we could be of value to your listeners.
Right on, man. Well, Shawn, appreciate you being on the podcast, man.
Thanks, Casey. Keep up the great work for agriculture.
I will try my darndest, Shawn. I'm Casey Seymour with Moving Iron Podcast. Make sure you check me out on Facebook, Twitter, and Instagram at Moving Iron LLC, LinkedIn at Moving Iron Podcast, and the ever so cleverly named Moving Iron Podcast YouTube channels. Check that out. If you are interested in getting some more information about the Moving Iron Summit coming up here in Nashville, September 11th through the 13th in 2023, shoot me an email. I don't really have any information to give you other than it's going to be in Nashville, September 11th through 13th, but we will have some good stuff coming out here over the next 30 to 60 days of kind of what some lineups might look like. So if you're interested in more information about that, go to MovingIronLLC.com and you can check out what was there last year and kind of get a feel for what you see there. Or you can just shoot me an email at MovingIronPodcast at MovingIronPodcast.com, and I will get back to you as soon as possible. So with that, I'm Casey Seymour with Shawn Hackett. Let's go some iron, folks. Out.
Moving iron in the 21st century. Hard work.